What is going on, you guys, and welcome back to another video. If you're new to the channel here, my name is Brandon. As always, we do have our Investing Academy as that first link down in the description below. Today we are going over two stocks that I'm personally really liking at the moment. With all the volatility in the stock market, there's a lot of these big names, these high quality names that have really come down to a level that I think is actually looking quite attractive. I actually have been adding to the second stock on today's list, and I'm very, very close to pulling the trigger on the first one. I'm just going to be monitoring it for a little while, but if you guys enjoy this brief little video with kind of me pointing you in the direction of stocks that I'm personally liking, do not hesitate to leave a big thumbs up on the video. As always, do your own research and due diligence. I'm just sharing with you guys stocks that I'm really liking at the moment. But let's start off with stock number one, which is the company Chipotle. Chipotle Mexican Grill, ticker CMG. I am such a lover of Chipotle as a consumer. I eat Chipotle really whenever I can. Unfortunately, there isn't a Chipotle where I live. Like Richmond, we don't have one. But anytime I get the chance when I'm downtown, I will almost always get Chipotle. My go-to is the chicken bowl, double chicken, add guac, ask for a little Tabasco sauce on the side, and you mix that up with a little bit of chips and queso, and you eat it all together. Oh my gosh, I love Chipotle so much, you guys. And Chipotle is a stock that is actually relatively new to the market. I don't want to say new to the market because they've been out there for a while, but when comparing up against, the Yum brands or the McDonald's, they are kind of newer. And it's been a stock that I've been following for so long and always like close to wanting to get into the stock. Never have in the past pulled the trigger, and up to this point I still have not yet. But previous to now, I was not entirely convinced that this was going to be a company here for the long run and here to stay, because they were kind of just expanding and growing. And of course they had their big E. coli scares on a couple of occasions, which got the stock dropping down. In hindsight, would have been a really, really nice entry point. Well, I do think that we are at a point right now where Chipotle is here to stay. My confidence level, my conviction with them being a restaurant brand or whatever you want to call them, they're not necessarily fast food, they're kind of a hybrid in between, but they're a company that I believe will be here for the long term and they will compete with the others. And one thing I really like about Chipotle in particular is they've almost kind of doubled down on the whole pandemic and how all the complications that came with that, where we couldn't go in and visit restaurants and we only got our food delivered by Uber Eats and DoorDash. What they've essentially done is kind of embrace that, and actually now a huge portion of their business is almost targeted or dedicated to these mobile deliveries and the food deliveries. If you're not familiar, they're starting up and actually implementing right now these things called Chipotlanes. So basically drive-through Chipotle. There are, I believe, a couple here in Canada, much more in the US, but basically essentially doubling down on this whole model of needing to not having to go into the restaurant yourself. And I don't know about you guys, but when I go into the restaurants, half the people are there to actually order themselves. And like half, if not more, are there. They're the Uber drivers, they're the DoorDash people, or skip the dishes. This is such a big avenue for the company, and they've done such a good job of building that up and just kind of looking at the direction that our world is heading. I think that it makes a total sense, something that I really buy into when you look at the actual business model. Chipotle at this given time does not pay a dividend, as it is a company that is very much still in the early phase of their expansion. Again, they are much younger than a McDonald's or a Burger King. They have currently about 3,000 stores in the US, so not a crazy amount, but their targets are over the coming years to double that, aiming for 6,000, 7,000 stores. I'm the type of investor that often will like to invest in companies that I personally am a consumer of, someone that I kind of back. And if it's a food company, like some food that I really, really like, there's no question that I kind of want to be part of this expansion. One thing to note is that they do trade at a higher multiple. Yes, if we're just looking at a traditional price to earnings multiple, for example, if comparing up to against some of their peers, but do understand they are also growing significantly faster. Again, a much younger company, whether we're looking at revenue, whether we're looking at earnings per share, this company is growing, so you do end up paying a premium. Today, the shares trade at $1,500, which I guess is a big number for some people, and I'm sure you can buy fractional shares on your various platforms, but Chipotle is a stock that I am liking on these levels. It's a stock that I'm very much considering buying the dip, and that's stock number one, Chipotle. Before we move on into the next stock, I do just want to say thank you to today's video sponsor, which is Passiv. Passiv, you guys have heard me talk about so much on the channel because it's a free product that I think is such a cool way to kind of integrate into your investing practice. It's great when you're using ETFs. You can set a target allocation, you can build model portfolios, link it up, especially if you are on Questrade, you can get their better plan for completely free and get all sorts of cool tools. Down below this video, I will include a referral link, which will let Passiv know that I sent you there, that you came from this channel. So definitely go click the link down below, check them out, and thank you to Passiv for sponsoring today's video. Moving on into the second stock for today's video, we're sticking on a food theme because this is a stock that I did actually add this morning. It is the company Starbucks, ticker SBUX. Today the shares are trading at $91 or $92 if I want to round up, which I believe is actually a very, very attractive price to be looking at. And they pay a 2.14% dividend. And I want to actually start with that today. Let's start with the dividend with Starbucks, because Starbucks is of course a dividend stock. Maybe not the most attractive if you're looking for high yields, but this company has 11 years of growth. They are compounding this dividend at 15% per year over the past 5 years. In other words, growing the dividend at 15%, which is actually a very attractive number to me. Anything above 10% I think is actually very, very nice. Not that they'll be able to do it forever, but if we do look back over the past decade to kind of look back at the history of this dividend with Starbucks, very, very rarely do we see it above 2%. So seeing a 2% yield caught my eye. Now, of course, there's a couple of factors in regards to why we have this dividend. A, the shares have come down, which is obviously going to have our yields creeping up. And B, they've been aggressively growing it. So with time, we would expect this dividend to grow. One of our students actually asked me this morning a really, really good question, saying that, well, I love Starbucks. I drink Starbucks. Everybody loves Starbucks. But do you think that the work from home society or lifestyle that we are kind of shifting to, or at least going to be living in a somewhat of a hybrid, do you think that's going to impact Starbucks and people aren't going to be drinking as much Starbucks? And it was actually a really, really good thought. You know, it got me kind of questioning and thinking about it. I'm like, And absolutely. The simple fact of the matter is, yes, I think that would have an impact. I don't think it was going to be an impact as big as a lot of people would make it. Starbucks has done such a good job over the years with their loyalty programs and getting your Starbucks cards. This all just goes to strengthening the brand loyalty around Starbucks and Starbucks drinkers. We have all these narratives and all these memes about Starbucks consumers because it's so true, because everybody goes out and drinks Starbucks. If you go to your local Starbucks or whatever the case is, I guarantee you there's going to be a line there. Regardless if we work from home, there's a drive-through kind of near my house, which I go to decently often. I don't drink Starbucks every single day, but when I'm in that line, I wait there for at least 5 minutes because it's just absolutely packed. People need their drinks, people need their Starbucks, and I don't see that ever changing. One of the things that has maybe been contributing to the drop in the Starbucks share price is that there have been a lot of stuff going on within the company with unionizing, and essentially there is actually, this is, happening as we speak in many different areas across North America right now, US in particular, that definitely could be contributing to the drop and the general uncertainty around the company. But for me, myself, for someone who does not currently own Starbucks, or I didn't until this morning, all of that is invited to me. I welcome that, because the lower this stock drops, I will be a happy buyer. I think Starbucks is one of those companies that is in a tier of its own. One of those premier, one of those high class companies that you kind of just watch. And I've really felt that they've traded at a premium for quite some time. I actually used to own Starbucks back in about 2019. For some of you that have been following the channel for that long, I ended up selling out of it because I thought that it had done quite well. In hindsight, I probably could have just held the stock, but I've been kind of waiting for a time to buy back. And with the share price down ballpark 20-25%, I think that picking up the stock in the $90 range is very, very attractive. Again, today trading at $91. That is the company Starbucks. But that right there, guys, is just a quick video for two stocks that I've personally been buying. These are just two stocks that are working for me personally in my personal portfolio. They're kind of fitting that role in the food space, in the restaurant space that I feel that I can kind of build up at this point. Doesn't mean that it is guaranteed going to be a great stock for you. In fact, it may not be a great stock for you. You have to do your own research. You have to do your own due diligence as always. But I hope this video is just kind of sharing with you guys the types of companies that I'm really liking right now. If you've been someone that's been monitoring the markets recently, you know there's a lot of stocks that have been down 15, 20, 25% plus. And I think it's a really cool opportunity to be looking at some of these, very, very high quality names that you don't always get to buy on a discount or buy at a cheaper price. These are just two that I'm liking. There's so many more. And if you're not already subscribed to the channel here and you want to know more of my picks, hit that subscribe button, hit the bell for notifications. That way you get notified when we do make posts. We post videos like this every single week, multiple videos a week. So make sure you're subscribed and hit the bell. As always, of course, we do have our Investing Academy as that first link down below. If you're somebody in Canada who is looking to learn the stock market more, maybe as a complete beginner, maybe you're just trying to get to that next level or up your game, we offer courses and training through our Investing Academy. Is that first link down in the description below. You can learn all about that. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.